original.
And I'm in love with the money.
When I talk with individuals who are 30 and under, they have a few unique questions that I'd like to answer for you today. So hopefully I'll have enough time to go through all 10 questions, but let's start with the question number 1. Do I really need life insurance when I'm young and I am healthy? And this is a good question, right? Because if you have no dependents, you don't have kids, you probably are just starting your career, you're wondering if it's a necessary or a needed expense. My answer to that question is that life insurance is more than just a death benefit. It's a financial tool that you can use to grow your wealth. If you choose to get a permanent coverage, you can actually build cash value inside of your life insurance policy that allows you to create more options for you financially as you go about living. You have access to additional credit that won't impact your credit score and that won't require any income verification or credit score check if you've built up that pool of wealth inside of your policy over time. So you can use it to help you with expenses, funding a vacation, a car purchase, deposit on your home, right? If you've started early and you've built up that pool of capital that you can leverage to access funds at a low interest to help you achieve your financial goals even faster. And guess what? Everybody will need funds to cover their final expenses. If you have debt, whether it be student loans, a car loan, or any other debt, you'd want to be able to ensure that those debts are paid off at the point that you pass, instead of being passed on to your estate, and then your family will need to deal with that, right? So you want to have those things in place regardless of how old you are. And the other thing too, you must remember that when it comes to insurance, your youth and your health is actually an advantage. They say health is what buys insurance. So if you're young and healthy, lock in your insurability. And if you're young, that means your premiums are lower. So what type of insurance is best for young adults? When investigating what insurance options are available to you, you need to have an idea of how you'd want your insurance to work for you. What are your goals? You need to look at your risk appetite. And you're planning for the future, really, right? So when you're looking at what insurance is best for you, look at your goals, how you want your finances to play out. Are you wanting to use the living benefits that insurance offers? And you typically have 3 options. You have a term policy, which is just a simple contract for a death benefit if something happens to you prematurely. And also you have permanent options, which include a whole life option or a universal life option. And both of these allow you to build cash value inside of them. You can store wealth there. One option is for those persons who are more risk averse and want the predictability, while the other option allows you to actually participate in market type returns. You're able to choose your underlying investment options for that portion of your policy premiums. You could choose from funds available on Fidelity, Mackenzie, Invesco, and you can benefit from the market performance. Sometimes they're awesome, sometimes they're good, and sometimes they're not that good. But as a young adult, because you have the advantage of time, looking at those options is very good. And also, you will be taking advantage of the lower premiums, which means more of your dollars goes towards the investment or savings portion of your policy. And for any young person who has a dependent, if not kids, you might have dependent parents that you'd want to take care of if something happens to you. That's one need that you can address with life insurance as well. Okay, I think I maybe answered this question in the previous, or partly answered this question, which is how much does life insurance cost for someone who is young, 30 and under, right? So again, what impacts the cost of your insurance? Your cost of insurance is impacted by age, which if you're young, you have that to your advantage, your gender, your health, and your smoker status. So the reason why I'd encourage anyone who is young to get insurance, you're locking in your insurability and you're benefiting for cheaper premiums. And if you choose to go with a permanent policy, you could actually pay up your insurance well in advance of your retirement and have that need addressed upfront, knowing that you've paid into it for 10 or 20 or how many years you choose to pay into it and not worry afterwards. So you'd be purchasing your insurance at a lower cost. And if you go with a permanent option, then you're taking care of your future need in advance. So the other question that is asked is, can I get life insurance without a medical exam? And the answer to this question is yes, up to a certain coverage amount. And this might vary from insurer to insurer, right? And again, also, whether or not you get a non-medical policy approved is dependent on the answer to the questionnaires, which they ask that you complete at the point of applying for an insurance policy. These questions will include health questions, lifestyle questions. They will include some family history questions. If all of that is all good and clean, you could likely get approved without a medical, up to certain limits, as might vary by insurer. But again, whether or not you get asked to perform a medical examination, a paramedical, this might include urine, blood, height, weight, and a telephone interview. That's up to the underwriter if they see the need. So it's at their discretion. So another question is, what happens to my life insurance policy if I change jobs? This is only a question if you have an employer-provided policy. If you have an employer-provided policy, then you'll probably lose the policy, or you might have the option to transfer the policy. And typically that is at a higher cost. But in most instances, you'll find that you lose the coverage. So I would say it's better to buy your own life insurance coverage that will follow you regardless of what job you have. And you'll have that coverage as long as you maintain the policy, pay your premium as per contract. So how does life insurance fit into the overall financial plan? Right, so this is the next question. How does life insurance fit into your overall financial plan? Well, what life insurance does is provide certainty in the event of certain instances. And for life insurance, it's death. For critical illness, it would be a critical illness. For disability, is in the case of a disability. So life insurance provides certainty of an outcome should an event happen. So basically, life insurance policy, if you pass, there's a death benefit payout to your beneficiaries. In Canada, it's a tax-free payout, and it goes directly to the beneficiaries. It has the ability to avoid probate when a beneficiary is named. It allows for the easy and quick settling of your estates, providing funds to pay out debts and probate taxes and so forth. So that is one of the benefits of having life insurance in your overall financial plan. If you use it as a wealth building tool, as a store of wealth, you also have additional benefits. You're creating an asset that you can leverage in the future to access money quickly and easily, to pursue opportunities that can help you grow your wealth even faster. Or for example, if you're self-employed or your employer doesn't offer you a pension plan, then you can use your life insurance policy to create a retirement plan for yourself, right? So it depends on how you want to use life insurance inside of your financial plan. Life insurance and investing inside of your policy is also a tax shelter. So if you want to preserve your dollar and accelerate your wealth creation, leveraging the tax exempt nature of investing inside of your policy alongside with other tools like your TFSA can help you achieve your financial goals faster. And if you'd like some more information of that about that, please feel free to reach out to me. So if you chose to take a term policy, the next question is, what happens if I outlive my term policy? So with a term policy, you are insured for a specified period of time for a specified premium. And if something happens during that period of time, then there's a death benefit payout. The term policy can be 10, 20, 15, or 30 years, or a policy up to age 65. Different insurers offer different options. If you outlive your term policy, right, or if your term policy you didn't renew it, or it lapses, you lose that coverage. As the name suggests, a term or a temporary coverage. It's not a lifetime coverage, and if you should outlive it, that means the death benefit goes away. When looking at term policies, a good idea would be to find a policy that is definitely renewable and even better, convertible. Convertible means you can convert it into a permanent policy, a whole life or a universal life that will provide you your death benefit until the day you pass, regardless. So when it comes to insurance, a term policy would be like renting a house, while a permanent policy would be like owning the house, right? So you're owning your policy. When you have a permanent policy, it stays with you for life, while with a term policy, it's based on the terms of the contract, whether it be 10, 20, 30 years that you'll have coverage. And when that period passes, if you didn't renew, you'll no longer have coverage. Okay, so this is the 10th question. Can I use life insurance as an investment or a savings tool? And the answer is you can, right? And you have two options, a whole life policy and a universal life policy. They are both permanent options, but with differing features. For example, a whole life policy is it allows you to build cash value, but the management of that cash value and the return, the management is done by the insurance company, and the return is dictated by the insurance company as well. Right now, for a whole life policy, it's typically between 5 to 6.5%. That might be a return on your policy, and that is determined by the insurer. And they use various assumptions to determine how much they can pay out in the form of dividend or bonus into your policy. A whole life policy is typically more expensive because you do have to pay for the guarantees that are attached with that policy. You do have to pay for the management of that policy. And it is typically more often suited for persons who are more risk averse and want that certainty, or they have significant wealth that they can dump into the policy. So the cost of the insurance isn't significant compared to the cash value build. The other option is a universal life policy that I mentioned before, that you can use as an investment tool, a tax-exempt investing tool, whereby you can participate in the different funds, for example, fund mirroring the S&P 500 or the TSX 60 or the NASDAQ, and you can benefit from those returns. You can switch out your investment options depending on your choices. You can do an annual review and switch them out, change your mix, and benefit from market returns. With this kind of policy, you are making the decision, so you bear the risk. And you have control. You can self-direct the investments. It's fairly flexible as well. You can put more in, or if you need sometimes to take a holiday because your job situation changed, you have that flexibility built into the policy. And when you compare the cost of a universal life policy, which is permanent policy as well, to the cost of a whole life, you'll find that it's cheaper. For one, the cost of insurance that in the policy is lower. It's actually sometimes comparable to a term policy, which is good, right? And some insurers, when you have a universal life policy, they offer bonuses inside of the policy that can help accelerate the growth of your fund value inside of that policy. So those are the 10 questions typically asked by people under 30. So overall, life insurance is for most, if not everybody, right? Because we'll all pass. That means we'll have final expenses, probably a final tax bill. That's the basic that everybody will have to deal with at the end, right? Or your estate or your family that you leave behind will have to deal with, right? But if you want to use life insurance for living, then there are other options that are available to you. The ability to invest inside of your policy, growing your wealth, tax exempt, to create a retirement plan that if you don't have one, or to supplement the ones that you have for retirement, to have it as a source of wealth that you can quickly and easily leverage to pursue opportunities that come up, or even just to have more control over your finances. And it can also be used, again, in complement with other financial products like a TFSA or an RSP to craft your financial portfolio and also create a tax efficient future. Right. So again, thank you so much for listening. If you have any questions, feel free to reach out at info@moneymattersca.com or 647-951-6905. My name is Cardine, and I'm here to help you achieve your financial goals. Thank you all for listening. Reach out with any questions or comments.